For our first news story. Now, the latest Glassnode report has dropped, and their on-chain analysis suggests that Bitcoin could attract a massive inflow of capital in the event that there is a mass migration of liquidity leaving the stablecoin market and flooding into the Bitcoin buy side. So right now there is a measurement of exactly how much money. So for every dollar in Bitcoin, we can measure exactly how much money is in stablecoins. And the more money that's in stablecoins, we can say, well, this is all potential buying waiting to happen. Of course, a lot of individuals were a little worried about Bitfinex recently going back to court with the New York Attorney General's office. But let's not think about that right now. The amount of capital that's sitting on the sidelines in USDT or in stablecoins that is waiting to flow into BTC, which it does want to, right, does kind of leave this bullish fundamental on the side, right? Which, you know, is a little bit more than the hack of saying, hey, there's a lot of money that's not in Bitcoin. If that money went into Bitcoin, man, let me tell you, price gets skyrocket. It's a little bit more, you know, it's a little bit more than that. If you have money in USDT, I mean, you are an individual that's buying Bitcoin. There's not somebody who has USDT just because they want USDT. They don't yet offer that as payroll services yet. All right, so in their weekly report here, they talk about the supply of stablecoins and how it's outpacing Bitcoin's own growth, right? So they call this measurement, this ratio, the Stablecoin Supply Ratio. This is a metric that represents the ratio between the supply of money in Bitcoin and the supply of stablecoins, or the measurement of the supply of money in stablecoins. And you can use it, well, the way that they utilize it is to define the theoretical readiness of money to flow into Bitcoin. So the more money held in stablecoins, the higher the potential for a large inflow of capital into Bitcoin on short notice. Now, according to Glassnode, these non-Fed digital dollar representations tend to improve liquidity in the cryptocurrency markets. You know, USDT stablecoins do increase liquidity dramatically in the cryptocurrency market. They make it very easy. They make it much easier for professional traders to actually market enter or market exit or make markets or set prices, certainly than actually volatile cryptocurrency being held as the quote pair for these transactional trades. Traders obviously use stablecoins to purchase or sell cryptocurrency without needing to involve a banking institution. And there's a US dollar shelter during highly volatile periods in the market. But over the past few weeks, Bitcoin has been in one of its least volatile periods ever, with the king of crypto seemingly stuck in a narrow $300 trading range. And crypto Twitter receiving updates at all hours of the night every time Bitcoin does something on the 5-minute chart. Traders have apparently been unable to get a bead on a definite short-term directional bias, or if they have, they're certainly not talking about it. Generally, they're not talking about the ones that they have gotten wrong. According to Glassnode, Bitcoin's current price action is typically expected to coincide with lower stablecoin demand. When we have low volatility and ranging behavior, we typically see lower stablecoin demand. But the stablecoin supply is actually growing right now at a very impressive rate. And the top stablecoin Tether, for instance, reported a market cap worth over $10 billion last week. I have quite a bit of USDT. You know, Glassnode calls this the readiness of money. So potential rocket fuel for Bitcoin's next major move to the upside, as traders begin to move their growing cash positions into invested positions, ready to catch the next major breakout. Now, Josh Rager, he's actually one of the few analysts that I actually like to follow on Twitter. So individuals like Josh are watching Bitcoin's very, very low volatility and talking about it. Now, Josh Rager is based in the United States. He's a crypto trader. He posted this warning to Twitter on Sunday, saying, fasten your seatbelts. When Bitcoin hits this level of low volatility, it's usually followed in the coming weeks by a 30 to 60% movement in either direction, though. So no directional bias, though. So for reference, a 30% move to the upside is $12,200. And a 30% move to the downside is $6,500. Now, the Glassnode report, however, seemed to lean bullish, again, pointing to this higher stablecoin supply stuck on the sidelines as potentially leading Bitcoin's price higher. But they also remarked that this same stablecoin capital could actually just migrate into the altcoin markets and fuel the budding alt season, right? So with the rise in stablecoin supply, individuals just might be seeing people preparing to buy into Bitcoin en masse. But those funds just may be earmarked for another purpose, such as buying into altcoin pumps. That's a quote from the Glassnode's report. And obviously, it's very hard to deny. I mean, look, nearly every top altcoin has made better quarter-to-date gains than Bitcoin so far. Let's think about this from a more human perspective. Let's, I assume that you watching this probably have a little bit of capital on the sides. You haven't invested everything into the market. You have a $20 bill in your pocket, maybe. I don't know, possibly. But there's generally always ways for us to acquire capital and invest more money into the markets, right? You know, we can work a little bit more. We can take a second job. We can sell off assets, for example. So, for example, like right now, I have Tether sitting on an exchange. And if I see, and that what is that Tether doing? Like I'm a professional trader, I'm a professional investor. If I see big price dips, those start to look attractive to me and I will accumulate. Like I just talked about MCO. And I think that's probably true for a variety of individuals. Now, to be realistic, I do feel that it's more likely in the short term that Bitcoin does move down. I'm not heavily married to that. I don't have an extremely bearish perspective. It just does seem more likely based on what I'm seeing in the markets and my experience in previous other low levels of historically low volatility in Bitcoin's price action. So there's a better case, I think, to the bull side in the short term. But again, if you guys refer to my volume profile analysis and my overall analysis of Bitcoin, I am macro bullish. I do think that we do continue to move up. So what I'm saying is the fact that there's a lot of stable coins on the sidelines ready to buy into Bitcoin certainly does strengthen the bullish case, but it does not mean we cannot have a significant correction to the downside before. So to summarize, a low stablecoin supply rate, or SSR, is generally a bullish sign for Bitcoin. The purchase of Bitcoin is, of course, not the only use, though, of these stablecoins. The ballooning stablecoin supply might see investors buy into Bitcoin en masse if they see the right moment, but those funds are likely earmarked right now for another purpose, like buying into altcoins when they dip down next time. Now, of course, there is another possible hypothesis for what a growing stablecoin hoard could mean for macro trends. It could mean, in fact, that it could only be tangentially related to cryptocurrency markets. The entire world is crazy right now. We are in late stage empire era. Economic conditions are uncertain across the globe, and this growth in stablecoin supply could be pointing at the adoption of a new way to actually store wealth. There's a certain proportion of international investors who would prefer to keep their wealth in USDT while they ride out the economic storm. You know, some may be opting for these new blockchain-based stablecoins to stay liquid until the COVID-19 related dust settles. But one thing's for sure, when Bitcoin makes its next major price movement, which is likely going to be coming in the next few weeks, it's going to be shedding light on where those stablecoins are heading. So let me know your guys' thoughts and comments in the section down below. I do think that it is interesting to see stablecoins grow. And I talked about this for a while. USDT, not necessarily, dollar tether, but stablecoins are a no-brainer, right?